One of the best ways to be great is to study those that are already great. One goal I have for this channel is to strive for greatness in investing every day. I want this to be a community of investors that can be the best we can be. So each quarter, I like to review what the investing greats are buying and selling. I view these super investors as a bellwether for the economy, and we can get some great ideas for our own portfolios as well. So today, we are looking at what they bought and sold for Q2 of 2024. Welcome to the Quality Investors. Many of the top investors share certain traits. They have long-term hold periods. They tend to have concentrated portfolios, and they tend to concentrate on certain sectors. And what they buy and sell may reveal their thoughts about the economy or on what industries are ascending or declining. So in studying these investors, we can become better at honing our own investment strategies. But it is also important not to just copy the investments of these investors. We don't know the timing of their buys and sells. They also have access to certain deals or better terms due to the size and structure of their buys. So today, I want to review the Q2 13 Fs of a few of the super investors that have had the biggest influence on my own investing philosophy. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. We are going to review 4 different investors. Those investors are Daniel Loeb, Chris Hohn, Terry Smith, and Warren Buffett. So let's begin with Daniel Loeb. Daniel Loeb is the founder and CEO of Third Point. Third Point is a hedge fund that focuses on event-driven, value-oriented investing. He is an activist investor, and he likes to buy into companies he believes are in trouble and that he can influence with his activism, whether it's changing strategies, appointing new board members, and so on. He has a fairly large portfolio of 43 stocks, and I just wanted to take a look at what he considers as companies that he believes are possibly undervalued and are turnaround plays. Of course, some of his bigger holdings are the Magnificent Seven stocks. You have Amazon here, which is his largest holding, Microsoft, Meta, and Apple and Google, but a few other stocks on this list can definitely be considered activist plays. The most notable is Bath & Body Works, as well as a little bit further down the list, Advance Auto Parts. Loeb started buying Bath & Body Works in Q3 of 2022, and then slowly added more over the next year. Right now, he owns about a 6% stake in Bath & Body Works. Of course, he applied some of his activism here, getting multiple board members added, and was instrumental in the replacement of their CEO. And since he started buying his stake in Q3 of 2022, depending on the timing of that buy, Bath & Body Works is still down about 10% from that time. So there's still work to do here. That could also be one of the reasons why his 3-year performance could be fairly poor at 4% loss compounded annually over the last 3 years. Another notable stock that he's active in is Advance Auto Parts. He just started buying auto parts in Q1 of this year. Right after his purchase of AAP, he reached a settlement with the company to get 3 board members added to their board. After getting those members added, Loeb stated, with fresh perspectives in the C-suite and boardroom and a long runway for growth, we believe Advance is well positioned to create meaningful value for shareholders. I find his portfolio interesting because it's a very broad mix. You have technology as his largest sector percentage, but there's also large holdings of consumer discretionary, utilities, information technology, industrials. The consumer discretionary and industrials can be seen as pretty risky right now in this environment, considering there's a lot of fears out there about a recession. And I've always shied away from utilities because I feel like there's not a lot of growth there. But other than those 2 activist positions that he holds, he did reduce some of his larger holdings like PG&E, Microsoft, and Meta, most likely taking profits there since they've been all on a large run over the last few months and years. And also looks like he took a nice profit in Q2 out of Google. He bought back into Google in Q1 of 2024 at around $150. And then when it was trading in the 180s, he took some profits. So all in all, an interesting portfolio, and I'm going to keep an eye on it because of its broad economic holdings. However, his strategy is slightly different from mine, considering he is an activist investor, but he is more value oriented. Next, we're looking at Chris Hohn of TCI Fund Management. Chris Hohn is a very classic buy and hold investor. And another reason I like his portfolio is that it's a very concentrated portfolio. This is something I'm striving to get towards. He has a portfolio made up of highly steady, highly reliable, wide moat businesses. His largest holding is GE, followed by Moody's Corp, Microsoft, Canadian National Rail, S&P Global, Visa, Canadian Pacific, Kansas City, and then the 2 Googles, as well as a new buy Ferrovial. I don't know much about Ferrovial. What little I did look into it appears that they deal with transportation infrastructure. In that theme of transportation, you can see he also owns Canadian Pacific Kansas City, a railroad, and Canadian National Railway. So clearly he sees a lot of potential there in that type of infrastructure. Of course, he also added a little bit to Moody's and S&P Global, which is interesting since they're effectively a duopoly with one another. And also two stocks I've been looking a lot at over the last few months, but I've just been very hesitant to buy into due to their valuation. But he clearly sees some growth there, and I might have to take another peek at them to see if I'm willing to jump in and take a risk there. But I do love both of these companies. I think they're excellent businesses with very wide economic moats. Now, you didn't see it on his main list here, but he also did sell out 100% of his stake in Thermo Fisher Scientific. He started buying Thermo Fisher back in Q4 of 2022, adding in each successive quarter up to Q3 of 2023, before starting to sell down his position in Q4 of 2023 and finally selling out completely in Q2 of 2024. And looking at the reported prices here, it looks like he probably didn't have much of a gain here. Maybe he thought this stock just wasn't going anywhere, like maybe his investment thesis wasn't what he thought it was. I couldn't find a lot of information around why he bought Thermo Fisher, but what this shows me is that if a stock is not performing against what your original investment thesis was, you cannot be afraid to cut it out of your portfolio. And that's what Chris Hohn absolutely did here with TMO. His 5 and 10 year track record has been one of the more impressive of the super investors. His 10-year compound annual growth rate has been 12.3%, beating even Warren Buffett, and his 5-year CAGR is at 15%. So he's definitely done well for his investors, and both of those numbers have beaten the S&P 500. The next investor on this list is Terry Smith. Terry Smith has been very influential in my own investment philosophy, and he spent a lot of this quarter just selling his positions. See, going down the list here, he only added to 3 separate positions. He added to Fortinet, Texas Instruments, and Oddity Tech. And in every other stock that he owns, he actually sold some of his stake. His 10-year performance has been at 11.8% per year, which has beat the S&P 500. The S&P, for reference, has been at 10.9% over the last 10 years, but he has underperformed a bit for the 5 and 3 year. His 5-year return is at 7.17% per year, as well as a loss on his last 3 years at 1.5% per year. Terry Smith sums up his investment philosophy very succinctly. Buy good companies, don't overpay, do nothing. Although his do nothing part of it seems to be fast and loose in this quarter. Now, he clearly just trimmed his positions in each of these stocks. He didn't actually sell out of any of his stocks in Q2. So he could just be taking profits and stacking his cash balance. But to me, his notable buys with Fortinet and Texas Instruments, he really took advantage of Fortinet's lull in price over the last few months after his dipping down into the 50s before skyrocketing after its very good recent quarter. So he clearly added more. It looks like about a price of $60.27. Fortinet has skyrocketed since its earnings and is now at $75.66. Texas Instruments is also another stock that I've had now for a while, and I haven't touched. I haven't bought or sold any of that in a long time, and it's given me a nice return. But I must admit, it was nice to see my Texas Instrument purchase validated last quarter when Terry Smith first purchased into it. But in general, I do love the makeup of his portfolio. These are all very high quality companies. A lot of these businesses I have on my own watch list, and a lot of these businesses are just staples in the market that you can really see being around for a very long time. ADP, Pepsi, Procter & Gamble, McCormick, companies that just make basic goods that people will always need. So I'm always interested to see what Terry Smith does every single quarter. Like I said, most of my philosophy is influenced heavily by Terry Smith, and it'll be interesting to see if he can up his performance after a pretty bad 3 years. He has turned it around a bit in the last year, gaining over 17%, but he still has a ways to go if he wants to get back to his S&P beating ways. And the final investor on our list today needs no introduction. It is Warren Buffett. Considered by many as the greatest investor of all time, he of course is an absolute legend. I normally don't talk about Warren Buffett because so many other people cover him, but I did want to include him on this list for one specific reason. Before I get into what he did in general for this quarter, let's go down a little bit further on this list here to this holding right here, Ulta Beauty. He bought in to Ulta Beauty this quarter, a pretty sizable $266 million stake, in fact. And after it was announced that he bought into them, the stock rocketed upwards about 12%. Ulta, of course, was in the doghouse only a few weeks ago before it was announced that Warren Buffett had purchased them, getting down to the low $320 range. His reported price here is at $385.87. Of course, we don't know exactly what his cost basis in Ulta Beauty is. And I was just pleased to see that the best investor in the world bought a stake in Ulta Beauty, not only because I'm an investor in Ulta Beauty, but because I'm an employee of Ulta Beauty. And it's just a nice vote of confidence when somebody of Warren Buffett's stature buys into a business like Ulta. But the big news for Warren Buffett, of course, was his massive reduction of Apple. He sold 50% of his stake in Apple. Before that, his stake in Apple was almost 50% of his entire portfolio, now down to about a 30%. Of course, he had a massive return on his investment in Apple. It's very well he could just be taking profits and adding to his already massive cash balance. Because if we come down here to see when he first started buying Apple, he started buying Apple in Q1 of 2016, right around a price of $27, and then was adding through 2018 while the price was still below $60. Of course, the price that he's reportedly sold at is at $210, so he's had some very nice gains from his Apple stake. But all in all, his portfolio really remained unchanged, nothing really exciting to report here. He added more Occidental. He seems to be really, really in love with Occidental Petroleum. You can see since he bought back into Occidental in Q1 of 2022, he's just bought some almost every single quarter since then. But of course, Warren Buffett's performance is the gold standard. And as Warren Buffett nears his retirement here, it'll be interesting to see what happens with Berkshire and if their investment philosophy continues on in Warren Buffett's absence. So that's where we'll leave it today. This is a list here of the most owned stocks by super investors in the world, sorted by how many super investors hold that stock. Of course, the tech and Mag 7 dominate the top of the list here: Alphabet, Microsoft, Alphabet again, and Meta Platforms, Amazon. But I thought that would just be a good look at some of the best investors in the world are looking at today, and then looking at their portfolios, trying to see what sort of lessons we can learn for our own portfolios. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.